On today's episode of Positively Sloped, Scott and I discuss the recent developments out of the Fed, as well as the changes being made over at the Bureau of Labor Statistics. And then we touch on Nvidia and AMD's deal with the U.S. government to trade their chips in China. And then we get into a heated debate about whether the Fed will cut 50 bips in the next 6 months or not. Stay tuned. Scott, let's start with a flashback to the last episode where you mentioned that the Fed might be maybe using some old and maybe estimated data to, use in terms of making their moves and deciding to cut or not. Not a day later, we had the news that May and June jobs reports were revised down almost 260,000 total jobs, and that July came in just positive on jobs. What does that tell us about the economy? Is the economy fading and wavering when we previously thought it was extremely strong, and how smart are you?
Well, I mean, according to President Trump, if the economy is good and going hot, you're very smart, because that's what we were looking at before that jobs report. So the jobs numbers, the employment picture, as you mentioned, Jake, a big focus of the Federal Reserve these days when it comes to interest rate policy and policy going forward when it comes to how accommodating they want to be. And I would say the economy, based on those job reports, is weak to quite weak. To use a word, because the numbers, as you mentioned, were some of the worst revisions in numbers we've seen in decades, backwards 2 months. And then obviously the month of July was very, very low, below indicators that we thought we had coming into the month. So the point to be made here is that this is one data point in many of them that the Fed needs to be looking at. I mean, they need to be looking at a lot of inflation data, whether it's CPI, whether it's inflation data that's in the wage growth numbers in the jobs report, which was, by the way, tame, which is a good thing. But more so when you look at also consumer confidence numbers, you look at prices paid, you look at the PPI numbers as well, you start to see that the Fed has a lot of, tools in their kit to look at when it comes to interest rate policy. And while jobs numbers are suddenly the bailiwick for those who want to go out and say that the Fed needs to cut rates because the economy is very, very weak and isn't getting weaker, I think there's a lot more out there that the Fed is taking into consideration that makes them still be on the sidelines here.
Well, to be clear, is the worst 2-month downward revision in almost 60 years.
That sounds pretty bad.
1968. That's not very good.
That's back to the days you were born, so you actually probably had something to do with that. And days,
give or take 30 years.
Give or take 30 years, minus 30 plus 60. And it also shows you, though, how kind of screwed up the jobs numbers
actually
are.
Was right, minus 30
That
plus
was
60.
actually good math. I mean, that's why we're doing this pod here. We're learning math as we go. But that's also another reason to show ourselves why that data point was it really that bad, or is the data that skewed? And we've been talking about this, like you mentioned, on the pod before. We've talked about it on some of our calls with some of our advisors, is how the jobs numbers are great. They're a great indicator. They're a way that we try like to see how good the economy is, how good some of the market movements are. But there's a lot of other things in the jobs number besides that headline number that are good to look at. And number two, the jobs headline number is going to be probably redone and rejiggered anyway, because that data has been bad for decades anyway. They needed to change, and this is probably the thing to finally do it. And the one way to do it, by the way, I've heard, is you fire the head of the BLS.
You fire the messenger.
That's right. And you hire somebody that's going to be a little bit more docile when it comes to making numbers that might look a little bit better, and enter E.J. Antoni as of this morning, who's been nominated. So Good luck, E.J., on that. I've met him at Fox News, by the way. A good man, but one that I hope he's up for this task for being the chief jobs number in chief, I guess, for President Trump's administration.
Yeah, absolutely. And I thought one of the interesting things was, we talked last time about the 2 dissenting governors, and that being the most split that the Fed governorship has been in a long time.
So they must have known.
Well, Christopher Waller, actually one of the dissenting governors, had warned that jobs numbers were going to be revised down. So is that posturing that he knew what was coming and we should have cut all along? And is that him putting his hat in the ring for maybe an early nominee for May of 2026?
Oh, I mean, I think that's putting his hat in the ring and throwing every other hat out of the ring.
Yeah.
I think that's Chris Waller saying, "Hey, hello, I'll be the dove that you want me to be, and fly, baby, fly." And that's the other thing too, is that the Fed does have a lot of other indicators in their pocket, as we talked about. But I have a theory too that the Fed knows really what the empirical data is. They have to. I mean, if there's anybody in this country besides maybe President Trump, that knows data and that knows the empirical nature of this data and where the data really is, Jake, over the last several months, and where the data is probably likely going, it's Jay Powell and company.
Yeah.
So the fact that Waller is coming out there already and saying, "Hey, I'm gonna be the dove or be the less hawk that everybody else is," I think that's a way for him to say that he wants to be the Fed chairman come next May.
Well, I think that point worries a lot of people. That is the Fed still credible? Is the data and the decisions that they're making based on reality, or is it based on abnormally high results that are going to be revised down? And that's shaken a lot of consumer confidence in the Fed.
It has. Well, that's the other problem too, is how much influence does the Fed really have here? Because
depends who you ask.
Well, right. And if you ask me, the Fed needs to have as little influence as possible. As we talked about, and as we've been correct about, when the Fed is out of the way, when the Fed is not in the headlines, not on the front page, etc., not on stage and doing what they're doing, that's when the Fed is best, because that's when the markets and economy do the best, both in interest rates and in stock prices. And so if everybody wants to get the Fed back involved and say that they need to be dovish, they need to help this economy, yet this is like the strongest economy in the world, according to some in D.C., it doesn't correlate to me, because why do we have interest rates that we're begging to have, yet the economy is so great? Yeah. You don't cut interest rates when the economy is so great. You cut them when you need to cut them, or when there's a deflationary environment. And my theory is you cut interest rates here too soon. We have the tariffs coming down the pike here, depending on how many 90-day extensions we're going to come up with. You have inflation likely on the doorstep if you start cutting rates here and make money so cheap again.
Yeah, and you brought up the new nominee for the head of the BLS. There was also another nomination President Trump made last week. That was, I don't think it's you. I don't think he likes you very much. But that was Stephen Moran for the new governor position that is open for about 5 months, right? The end of Adriana Kugler's term was in January. So he's been nominated in an interim capacity for the next 5 months. How much you know about Stephen Moran and his prior work and policies?
About as much as you know about Adriana Kugler, which we all know about that. A little bit here and there. I mean, Stephen Moran he's a good economic advisor. He's better than a lot of the advisors that Joe Biden had considerably. So there's that. And also the fact
that President Trump likes
that's right. Well, now exactly now he does, and I'm back in the good graces. But Stephen Moran is a good study. He's had a good track record of kind of the economic predictability that they've put out there. He's put out, I think, in my opinion, a very kind of even keel kind of view on things, even though it has been a little bit more skewed towards the growthy side and towards the economic expansion side, because I believe that was the right call. And so for Stephen Moran to be up in that position, I think is great, and I think that's a good possibility for that to be kind of fulfilled after we had a long time of looking for it.
Here's what I'm thinking. Stephen Moran worked for President Trump under his first term under Steve Mnuchin. He's been, very pro-tariff, very pro-crypto. He's anti-Fed independence. He's everything that President Trump wants to influence in the governors.
It sounds like Trump himself, actually.
Would you think, and I think President Trump is the king of the unprecedented. Is there a possibility that this is going to be President Trump's nominee for the chairman? It would be the quickest rise to chairman in Fed history. But again, he's the king of the unprecedented.
If anybody could do it, it's Stephen Moran that could pull it off, because Stephen Moran becomes that very good extension, like you mentioned, of the administration. So why wouldn't he be at least the nomination, which then obviously would have to go through some additional analysis. But let's face it, if we get to the point where everybody's upset with what President Trump is doing with regards to the Federal Reserve, I think we've got a really calm market, a really calm environment, a really calm world going on, to where I think it's going to be chaotic enough to where the Fed chairman thing is, at this point, saying let's say come this time next year, or say in May of next year, that's going to be somewhat of a forgotten dramatization, and therefore they're just going to let the Fed chairman walk right in and take the seat and cut interest rates most likely. So there you go.
So you think it's a news cycle thing? By the time President Trump does the next thing, by the time we have the next data point, we're going to be moving on.
Yeah, because as we've learned, there's other things in the news cycle that he's passed over and gotten passed upon regarding other things that he's been dealing with, that he tends to take the focus off of if it gets too little too hot or a little too cold for him.
One of those other news items would be tariffs. Obviously, they've been the story of the year. We had the 90-day pause, and then over the last 3-4 weeks, we've had deals with countries dripping in. I think the big one to talk about, right, is the deal with chip makers to sell their products in China. We had Nvidia and AMD have their really nerfed product approved by China. There's some pushback by the Chinese government that they're worried that there's a backdoor entry for the U.S. to access.
Gee, that's too bad,
probably
China.
Is.
I'm sorry to hear that.
But let's talk about the deal that President Trump made with the chip makers. Pretty incredible that he was able to get 15% of revenue from Chinese sales to be kicked back to the government as basically a second tariff.
Yeah, it's basically a point of access. It's a pay-to-play type of thing that would be effectively that tariff that would come back to the United States that would be paid by companies or the businesses or maybe the Chinese government itself to get access to those chips. Now, the funny part about that is I don't think this is as easy of a done deal as it looks. I mean, President Xi, last time I checked, and his cronies hate us. I mean, let's just call it that. I mean, hate is a strong word. It's probably actually too weak in this case. They detest us. They want us probably dead. The point is, now President Xi and his cronies are saying, well, we don't want everybody to use the Nvidia and the AMD chip. So after that deal was made by Trump and everything was looking really great as far as getting some of the money back, then China comes out and says, well, we may not end up doing the deal with Nvidia and AMD anyway. So those things are just going to be so postured and so back and forth. We're already on our 15th 90-day extension with China at this point. So by the time that we get a deal with China, China that's going to be fair, I think we're all going to be dead.
I mean, we're cybersecurity adversaries, right? Like, part of the tariffs in the first place was because Trump wanted to stop Chinese malware attacks. So, yeah, of course, China's probably a little suspicious that we're doing the same thing when we sell like a very, very nerfed version of the Blackwells for Nvidia to China. The H20s are not even close to the computing process capacity that the Blackwells have. And so if you're China and you're getting a worse product than we have in America, your antennas are going to be up.
Yeah, and also, like, all the DeepSeek things that came out earlier that freaked everybody out. And then, like, you look at what China's done over the course of, I don't know, the last 3, 5, 6, 7 months, years. There's always a backdoor with China.
For sure.
They always have a backdoor. So why China is all of a sudden concerned that there's a backdoor on them seems pretty rich to me, because, of course, there's going to be a backdoor somewhere, because that's China. That's doing business with China. It's about time we get one backdoor for the thousands that they take on us every day.
You know what I thought was interesting was this news came out on Sunday. I thought this was headline news for Nvidia and AMD in a bullish way. The 2 days since the news has come out, trading days, stocks have been flat to down. I don't really understand the sentiment from investors there.
Yeah, not exactly your Sunday fun day news cycle there, because you're right. It did not boost stocks very much. It pushed the NASDAQ up a little bit in futures overnight Sunday, which came down and came back to earth Monday. And obviously today things are kind of flat and kind of boring a little bit. Nothing's really happening, because I think the market doesn't exactly believe that this deal is really what it was cracked up to be. Because if you just look at the nuance of this news, it was nice to see, but it's not something that's guaranteed to go through. And we've had so many of these positive news cycle type of things with China before, and they've gotten blown up days later. I don't think this is going to be that much different.
Yeah, I think we're 2 weeks away from Nvidia earnings, which will basically cap the earnings season. And so I think at this point, right, we've seen this before with Nvidia in the weeks leading up. There's really not much that can move the stock, because we're just waiting to hear revenues and we're just waiting to hear guidance.
Yeah, and Matsusan is going to come out with something amazing. They're going to come out with another amazing comment about some of the chips they're going to be developing, some of the power that they're going to get to make them. All those things that are happening with regards to the future of Nvidia is nice to have China maybe in it some way, shape, or form, but is not necessary in my opinion. And that's the reason that, too, we've owned the stock for several years, because of the fact that it's had ways to overcome a lot of these fits and starts that the tech sector has had over the course of this rally.
For sure. So do you think that the H20s being sold to China, right, again, I can't say it enough, but a kind of diminished version of what we're most capable of, is that us trading, our technological leadership in exchange for revenue? And to be clear, right, between Nvidia and AMD, they did $23 billion in revenue in China last year. So at a 15% clip, that's not cut into our $36 trillion deficit anytime soon. So is the juice worth the squeeze here?
Well, listen, you can say H20 as much as you want. Don't feel bad about that. I love how you say it, and I just think that it's something that also.
What that means.
I don't either. That's like the way you word it. But I think the deal with China is it's a headline. I mean, this is a T-shirt, and it doesn't really matter anything else than that, because we can't trust China with regards to any business deal we make. It does show that there's maybe some willingness for somebody over there to maybe do a deal with us and then change it. So there is a little bit more, say, diplomacy going on with China, I think, these days than maybe there was like 3 or 6 months ago, but there's still that looming trade deficit with them. There's still a huge trade issue when it comes to tariffs that's still out there. And also it's something too that if you look at where the economy is going forward in the United States, we have tons of stuff that still gets made over there.
For sure.
So you have so many things that need to be worked out.
Never gonna change.
That's right. It's this Nvidia AMD thing as a T-shirt or maybe like a flag you can carry around for a couple days. Awesome. And then come next Sunday, that tariff thing's going to be wiped out, and they're going to probably be tariffing our stuff coming over.
Guys, I think we got to start a segment every time Scott says that there's another T-shirt that he made. He's got about 200 T-shirt ideas in his notes app. So whenever we hear T-shirt, we got to ring a bell or something.
Well, they're designs too, Jake. So they're not just like slogans. And one slogan is, I'll reveal it, is somebody's therapist knows about you. That's a T-shirt slogan that will be out there in December for Christmas time. Yes.
And so true.
Yes.
So true. Touched on, at least Nvidia earnings are coming up in a couple weeks. We've had I think a very surprisingly strong earnings season, or surprisingly strong to some. You've been a bull and said that the economy and the market is healthy, and so you were not expecting single-digit earnings growth. But
double, actually.
A lot of people were expecting single digits.
Shame on them.
We've had 90+% of earnings reports in, and we've got 11.8 or so % year-over-year growth of earnings. Again, beating the hell out of estimates that were like 5-6%. So we've got that, with a backdrop of jobs being incredibly weak over the last 3 months. What does that kind of give and take tell you?
You sounded like Trump there, incredibly weak. I mean, look, we had job growth, man.
We had
job growth after, yeah, you did. We had job growth after years of job growth, right? We had a little bit slow job growth over the summer because of the tariff thing, because of probably some of the hiring with immigrants and things like that. I mean, that seems to be coming up in the data, so I think that's going to be a phase. you're right about earnings growth. I mean, that's something that I think has really been the propelling nature of the S&P 500 and the NASDAQ this year and last year, is that everybody's talking about how rich stocks are getting.
Yep.
Everybody's talking about how bifurcated the earnings growth was.
Yep.
Fine. Guess what? You've got stocks getting rich because earnings and profitability are nuts, and revenues are crazy as far as growth. You also have things going nuts because you're getting concentrated growth in areas where, oh my gosh, we've actually bought some of the stocks and some of the positions. Thank you very much, Scotty Markets and Jake Bauer. But also the fact, too, and we've been telling people that, also that's where the genesis of the stock movements are. They're looking at prices and profitability as it relates to revenue growth and things like that. And you mentioned it. I mean, revenue growth alone has been well in double digits, profitability in the double digits for quarter after quarter after quarter. And every darn time, the S&P, Moody's, all these guys, these big banks that come out with these growth prospects and these earnings previews always say, this is the earnings quarter where everything starts to fall over and we go negative or go to zero. Hasn't happened since basically the war. And so I'm guessing that this is another pick your favorite war. I mean, pick your favorite war of today. It just means that there is likely going to be multiple quarters going forward of earnings growth. When we get to that high valuation in the marketplace, yeah, things will probably slow down a little bit. But we talked about Nvidia and AMD and about this crazy deal with China. But you said I've been a bull. I've been a bull in a China shop also because of the fact that I think what ends up happening is there is almost no other alternative that investors have right now, with rates kind of flopping around, maybe Bitcoin, maybe crypto. Gold's at nutty highs, by the way. So folks are chasing equities again. And I think that's a great thing to push stocks up into the end of the year.
That's your first angry Scotty Markets rant on the Positively Slope podcast.
That was actually me being kind, so just wait a few minutes.
Yeah, 100%. So earnings have been good. Guidance has been mixed, though. We've seen, from the first, again, 90% or so of companies, guidance is mixed. Tariffs is up again in terms of hits on earnings calls. What does that tell you about the uncertainty that these companies feel of the next quarters? Is that a product of not knowing what's coming next, or is that just we need some time to digest tariffs and see how it affects the data and see how it affects companies?
I think we know what they're going to do. Tariffs are going to be bad, and it's going to be a struggle for everyone. But it's the chance for
but we're going to make money.
Well, exactly.
We're going to
make that goes right to the government, doesn't it? It actually gets paid by the companies who hopefully get some sort of break from the government, and therefore they pay it back in taxes. It's a huge mess, and it's not an easy street like everybody thinks it is. But it doesn't matter because I think a lot of those tariffs are just a big hullabaloo as to what you were saying with regards to earnings reports. Yeah, hullabaloo, a big fake out, frankly, because these companies are going out there and saying, oh, well, we're not so sure about earnings growth going forward because of tariffs or because the WNBA is struggling with fanfare. Whatever it is, these companies are using a lead blocker, if you will, on tariffs or something else to say, well, if we don't hit our earnings reports, it's not our fault because of tariffs. And it's like they may not even be tariffed, and they're still going to blame the earnings on it. That's a good thing, though. Here's why. Watch the reactions that these companies have to these lower guidance or to these unexpectedly more difficult guidance points, because what's happening, Jake, is the market selling these guys somewhat hard in some cases, and then guess what? The next day or two or three, they bounce them back up. So that to me says the market doesn't believe it. The companies probably have not told the story well enough, and three, that's another reason to go out and chase stocks, especially ones that fall on those earnings reports.
Well, we saw that, and touching on the Mag 7 specifically, right? We had pretty incredible blowout earnings on the top line and most of the bottom lines for the companies that have gone so far, besides, and I'll say it correctly this time, Sans Tesla. Apple was a blowout quarter top and bottom. Stock is down since then, right? They uncertain guidance on tariffs. We keep hearing about Tim Cook in the news and how much money they're going to have to pay, and are they going to bring jobs back? Amazon, blowout quarter top and bottom. Stock is also down.
Amazing.
What is that?
Two companies that you've basically been single-handedly propping up over the last 2 years. Your Amazon shopping and your use of your iPhone. Number one, Apple's got a lot of problems. Apple's behind in so much tech and so much kind of user ability and user interface. I mean, Siri sucks. I'm just going to say it. And I'm going steady with Siri for the last 4 years as like a relationship.
My Siri just popped up.
And she did. Hi, Siri. Hey, Siri, you stink and you don't understand a word I say. Also, with regards to Amazon, Amazon's got difficulties now. They talked about some issues with Amazon Web Services. They've also talked about some of the difficulties they're going to start having integrating Amazon Healthcare, which I thought was a pretty cool idea when they bought PillPack a few years ago. I think that Amazon is that sleeping dog. Apple, to me, could create a worrisome thing. But then two other companies, though, Jake, that you mentioned that did do well, Microsoft and Meta on Facebook. And it's like one of those two, Google too. And a few of those companies you see are going to do very well. There's going to be a couple that don't do well and a couple that do okay. And so far, the ones that don't do well have just had flat kind of returns. And the ones that have done okay and well have gotten smoked up to the upside. So there's a reason to have, I think, a bullish outlook on a lot of these companies, and know that these companies too, by the way, at this point in the sales cycle and the economic cycle, are very good about dealing with curveballs that are getting thrown at them, and therefore they're still smashing this thing out of the park, like your boy Cal Raleigh.
Like my boy Cal Raleigh, throwback to when I won the home run derby contest.
I forgot about that.
Yeah. So pretty solid earnings reports there. On the flip side, and you go from kind of the more exciting Mag 7 tech heavy stuff to maybe the more boring consumer staples. What's going on with like Walmart, Target, big retailers? I mean, you've got to think that we had Amazon Prime Day. They had the most incredible Prime Day ever because Prime Day was 3 days.
And you were shopping on that day,
I
I'm sure.
was shopping on that day, of course. I got people to buy things for.
All day.
But what are the in-store retailers experiencing?
A lot of things, and I mean another T-shirt slogan came to mind there, which is "Do it all night like a red eye flight." Because red eye flight, do it all night like a red eye flight. I should say if I do it right, because you need to print the shirt correctly.
Again, we got to ding something.
Yeah, ding that one. But the point is that the Amazon shopping, people were doing it all night. I mean, Amazon numbers were absolutely incredible, regardless if there was a 4th or 5th or 17,000th day. Everybody shops at Amazon. Everybody likes it. The problem with Target to me is its brand. Target does not feel good when you go into Target. I hate to say it. I used to love Target. I used to think it was a great store. I used to go there a lot. And now I'll stop at Walmart instead, or I'll stop at Costco. Yeah. Because Costco is another one, Jake, that has some tariff pressure. They've got a lot of companies that they're working with. They're facing tariff pressure that are reselling to Costco to basically help them distribute. There's tariff pressure there, but my goodness, between Costco and Walmart, I think those are the two areas you go to when you look at consumer retail numbers to be a reality that everybody can expect to view as a true true aspect of what really the consumer is doing. Target and some of these other companies that are out there not doing very well, not going to do well going forward because they've lost a lot of the taste and a lot of the appeal to the consumer.
I mean, I love Costco. Who doesn't love Costco? You can go in there. You can literally buy anything. You buy outdoor furniture, you buy clothes. You can get a hot dog. It's an incredible place.
I've gone to Costco and like dropped my kids off there and made them go inside and hang out for a couple hours while I go to the bar. I go play like Topgolf. Yeah. It's great. And they have fun in there and they walk out with some stuff. I give them the card. They walk out with some stuff and there you go. And they have, and by the way, they walk out with some stuff. It's like, $2,000 later, they got 3 carts full of crap. But the point is that that's actually stuff that people want. And that's how they like shopping, Jake. To your point, you go get a hot dog, you get a fifth of vodka, you get some raspberries, and you also get maybe a rug.
Sure.
It's awesome.
Sure. So then last one we'll cover specifically Disney, which is you got consumer discretionary, right, with parks, and also sports and streaming, which has been a common theme of our first 2 topics here. Disney's still really struggling to produce good earnings. I mean, parks were actually up in Q2 and streaming was down, which is a little unusual. We'll get to some of the purchases and developments they've made in the last few weeks. But what do you make of Disney, struggling? Is there any way that they can break out of this slump that they've been in for a better part of 3 years?
I mean, I guess it feels like a lot longer, doesn't it? I mean, Disney not being able to figure this out is very strange. You mentioned about the streaming challenges. I mean, I think you wrote in some of the notes previously, you said Disney at a crossroads.
That might be.
And I thought you were like pulling at my heartstrings because Disney actually has a game at Dave & Buster's where I like to go with my kids called Disney's Crossy Road.
Oh, okay.
And Crossy Road is really fun. It's like a Frogger. It's amazing. If anybody wants to play me in that, I'll destroy you because I'm very good. But the point is like they're at a crossroads because of the fact that they've got this weird bifurcation, use that word maybe 15 times today, between like this streaming versus parks versus retail, like actually, movies and things like that. And it's like, where is their focus going to be? Because I think Disney is one of those franchises, if you will, that like, if they need to make money, the joke used to be just put out a kids movie.
Yeah.
I mean, honest to God, like make up some hero or some villain or whatever. The kids will just sit there and watch it. Maybe before they go to Costco. That's what I recommend. Send them to the Disney movie and then drop them off at Costco because
that's a full day.
That's a huge day for the kids, but they'll love you for it. You'll be the dad of the year because that's the other thing. Like, should Disney break up the company then? Because I still have a problem with Disney and how they manage the media side of that. The ABC side of things, and now ESPN getting involved possibly with NFL, which we'll jump to. I mean, ESPN and ABC and some of the cord, what do you call those? The cord stickers or the cord pluggers. Yeah. Those guys are a freaking disaster. So the fact that Disney still has that on their books, and that's a lot of the drawdown that they're seeing in some of the earnings and some of the growth in the revenues, that's an area where they may want to think about spinning it off. But as we've seen, Jake, in the, say, cord pluggers, if you will, the non-cord cutters, those guys are trying to consolidate now at any rate possible, Paramount and some of the other folks, Warner, and it's like they can't get much of a lick for a price on anybody out there because they know where the data is going, and it's going to the south.
Yeah, I think they may have signaled what they are going to do in terms of bifurcation. Are they going to break up the company, right? You mentioned and alluded to the NFL purchase of 10%. Well, you mentioned that ESPN is now going to host NFL Red Zone, but that comes with NFL purchasing 10% of ESPN. You also have, obviously, ESPN and ABC won the bid for Inside the NBA. That came from TNT. So buying probably the two highest and best shows in sports. And NFL Red Zone is a huge purchase from YouTube TV. I mean, Scott Hansen on my screen for 10 hours of uninterrupted football is like a dream every Sunday.
Wow. But does he know that?
He might. He must.
He does
I've got
now.
some thoughts on that purchase. I think, though, the combination of them getting NFL Red Zone and then also, the NFL buying 10% of ESPN is going to lead to some weird stuff.
Weird stuff, yeah, I guess. I mean, that's a weird word to use because there's a lot of things that could happen. I'm concerned about it, frankly, and it depends on how much they kind of make the NFL Red Zone and everything ESPN-ified, right? Because that's the thing about right, and me too. But I don't think they're that sanguine to do that right now because I think they want to stair-step their ways in. I mean, the problem I'm having with the NFL, not so much the Red Zone, because I purchase the Red Zone every year for the last few years because I love Scott Hansen. That's fine. He's good. The problem is now I have the NFL package, the season ticket, and the thing's like $6,000 or something like that. I don't know. It's pushing $1,000 or something like that. It's like $800. And it's like back in the day, that thing felt expensive when I was paying $160 for it, like before COVID. Yeah. So now they're jamming everybody with hundreds of dollars of cost to just get access to your favorite team's horrible games every season or every year or every week, rather.
Why are you talking about the Bears like that?
I was talking about the Vikings, too, but I'm trying to be humble here and trying to give you a bone. But the point is that there's a lot of things going on with that deal that I think we don't know yet.
Yeah.
And a lot of things that will actually help the NFL potentially. But the problem I have with this, too, is the NFL didn't need ESPN. I don't feel like the Red Zone didn't need ESPN. And the fact that, they brought ESPN in there, I thought was a little bit curious and something that we'll have to see how the integration goes because I disagree with something you said maybe earlier. Inside the NBA, I didn't even know the NBA was still having a season next year. So the fact that actually the inside of the NBA is actually still a show is great for them because they're going to need the NFL to maybe plug the heck out of that thing because I don't know if anybody's going to watch it.
Inside the NBA is an incredible show. My worry is I think that there's a giant consolidation in these streaming services and cable companies. And what I worry about, and you mentioned that they might stair-step their way into changes, but this is the same way that any private company or public company that buys another company makes changes, right? They take over NFL Red Zone because the product is great. You think in a year they're not going to say, oh, I know how to make this better. Scott Hansen's going to be off the show. He's going to be replaced by someone that's going to be pushed down our throats. There's going to be commercials that come into the show.
Ryan
that
Clark,
worries
maybe?
me. Inside the NBA, Ernie Johnson will be out. I'm sure they'll replace Kenny or Shaq with Stephen A. I mean, this is what companies do. They buy things, they think they know how to make it better, and they ruin it.
That was actually a good dumb voice you used about 30 seconds ago. I was going to make fun of it. I think that makes sense. If they make those changes, then we need a dumb voice like nonstop for those guys because you just mentioned basically the 3 stars or 4 stars of those shows that you're right. Companies, when they do come in the private sector and public companies come in and buy private companies and it's like, oh my God, well now we're going to come up and make everybody do such a great job because we love you and love everything you've done at this point, and then 6 months later everybody's wiped out. That's probably something similar that we're going to see here. But the new thing that's going to happen here is that everybody's kind of aware of that, I think, and also the fact too, if they do that, I think the consumer, the end person that they really need to view this could riot, could rebel. I mean, certainly you sound like you're going to riot, rebel. We might even have a bad podcast or two based on it. So that could be a good thing, and that maybe turn the tide a little bit more in the fact that we'll see what happens. This could be maybe one of those deals that ends up benefacting, whatever that means, helping both sides of this deal become better.
And I'm not much of a conspiracy theorist, but I was talking to my brother about this deal. Something that we were talking about, and I want to get your thoughts on it. ESPN, not that they do hit pieces on the NFL, but they cover concussions, they cover
drama.
Injuries, they cover
tons
CTE.
Of drama.
Is NFL owning a piece of ESPN going to impact how they report injuries, how they report stories, how they report ownership? Is this a way to almost stymie some of the negative reporting, or you think that's just way out there conspiracy theory?
I can't imagine the NFL would care, but then again, they did buy 10%, so if they want 10% to have that kind of influence, we'll see if that really does. Good call on that.
Tom Brady's running the Raiders at 5%.
Well, Tom Brady looks great in his statue. I mean, other than people throwing beer at it or whatever they did the first night. It was gigantic, and I thought his face was a little bit bigger than it should have been. But the point is that the NFL didn't really need to do this necessarily, and so the fact that ESPN's going to come in here and change their ways is something to really watch for to see how that integration is going to go in the first couple of years. And then you're going to know if this product's going to be better for both sides or it's better for one or better for none, even in some cases.
By the way, I don't know which industry and which job is worse at their job right now, statue makers or weathermen. I mean, there have been so many statue unveilings lately. The faces are all messed up. The size of the shoulders are weird. Why this is the one job? Why can't they figure this out?
I don't know. I've seen some statues
that
were revealed.
Better, but this was like 50
no, it's true.
feet
I've
tall.
seen statues that have 2 left hands, which is weird because the guy had 2 right hands, not left hands.
Right.
It's there's a lot of things out there that have been done that look like they're just rushed to be done and finished, and then all of a sudden they get revealed, and everybody's upset that they didn't look good. And so the weatherman thing though is an attack. I don't appreciate that because the weather has actually been really freaking dangerous this year. It's about to get more dangerous with the tropics
of rain in Milwaukee.
Yeah, and then in basically 3 hours. I'm a big weather guy. I'm a big weather freak. I'm starting as a guy who's basically been following the weather since I was a baby. I'm starting to get scared of the weather these days, which is not a good thing because the weather feels like it wants to destroy us, and it's doing a good job of that so far. And we're seeing a lot of incidents weather-wise that were not taking place several years ago. And so everybody's got to pay attention to the weather and make sure you heed the warnings and do not try to drive into the floods and do not try to chase storms like you do, Jake.
I mean, you told me you were on your balcony at 2 in the morning watching the storm last night, which was incredible.
I think it was 4 a.m., but regardless, I was losing track because I was getting struck by lightning and I was, freaking out.
Scott, let's wrap up today's episode with fade or trade. First topic for you to tell me if we're going to fade or trade, and then I'll give it right back to you. If we disagree, again, we fist fight. So are you fading or trading that the Fed is going to cut 50 basis points by the end of the year?
At risk of putting one hand behind my back, I'm going to fade it because I think the economy has been talked about this over and over again. It's always said this is the last leg of the economy. The economy's going home from the party. Mom and dad are pulling into the driveway. It's time to hide the music and hide the booze and everything like that. Turn the music off. It's too loud. No, the economy is self-sustaining at this point. The tariff thing is screwing things up a little bit, throwing some things for a loop, but the economy has been told to be going into recession now for 5 years in a row. There's a reality look at here. The fact the economy is actually sustaining itself to keep going. We just got to get people to leave it alone.
I completely disagree. I am again, and here we go, fist fight. I am trading the fact that the Fed is going to cut 50 basis points. I mean, projections for September are already at 81% for a cut. I think that'll be 25 basis points. And we had CPI come in today at 3.1. That's
great.
Up again. That's up again.
Up by 0.1%. And also, okay, fine. If we cut rates, up is up. If we cut rates by 50 basis points,
is up down?
Down is the new up because here's the thing. If we cut rates, does that mean a recession is imminent? Not necessarily. That may stave it off then. So therefore, you just answered my question and took my side. Thank you. Next one. The second fade or trade, Jake. The economy is heading for a recession if we get the 50 basis point rate cut.
I don't think those two are correlated.
You just said they were.
No, I don't think they're correlated at all. I think the data that is being shown is going to lead the Fed to cut 50 bips, but I don't think it means we're in a recession. So I am fading that I'm fading that we're
so you're agreeing with me.
I'm fading that we're headed to a recession. I'm trading that it's weak. I think the numbers from the last 3 months are absolutely undeniable, right? You have Doge doing a lot of layoffs, so there's definitely some government-related cuts for jobs in that sector, but it's pretty undeniable that the economy is weakening, let's say. But I'm fading that we're in a recession.
Sure, it's weakening over the last couple months and weeks, but I'll tell you this much. I mean, how about a quick kind of on the run fade or trade? I'm going to fade the fact that they're going to cut 50 basis points by the end of the year. They're not going to make a 50 basis point cut by the end of the year. They may make 2 or 1, but I don't think 150 basis point rate cut is coming by the end of the year, or probably not even coming by the election of next year, the midterms. There you go.
Come on,
I'm telling you.
You're going to say there's not going to be 2 cuts by midterms.
There could be 2 cuts, but not a 50 basis point cut.
No, 25.
No, I don't think so.
Okay. Next fade or trade, Scott. You think the Nvidia AMD deal is going to get stricken down by legislation?
If China doesn't strike it down first, yes, because the fact that this is looking at a deal,
so
looking as a deal. I'm going to trade that one because this is looking like a deal that was put together a little bit kind of hastily and a little bit kind of like, hey, we're going to put this out as a big headline and make everybody get excited about working with China. China does not want to work with us. China does not trust us. We certainly don't trust them and have any reason to trust them at all, other than they send us like thousands of products a minute. So we definitely need them, including maybe these mics and that beautiful coat you're wearing today, Jake.
Thank you.
It's also like one of those things where this looks like a foray into maybe doing deals with China when it comes to tariffs, but this one to me is not going to go through, whether it's because China denies it or because maybe legislation says, hey, let's make this a little bit more safer for the U.S.
I'm trading this as well. I don't think this deal is going to end up going through. I think there's, again, a talk about unprecedented earlier in the show, but this is something that we have really never seen before, the government dipping into, company deals, and I understand this is a product of tariffs, but I'm trading. I don't think this trade goes through.
Right. I mean, think back to the Huawei days, think back to the TikTok days, which are still not resolved, by the way. I mean, we have kind of a stalemate on those. We keep pushing that. I mean, we have a 90-day delay on TikTok for like the last 900 days. So, I mean, that stuff still hangs out there. I don't think this goes through by any kind of legislation if it's put to one.
Agreed. Next fade or trade, Scott. WNBA is back in the news, probably not for reasons that they want to be, but
why not?
Are you fading or trading that the WNBA is going to figure out this new fan epidemic that's going on?
Well, Jake, listen, I did notice in your emails that you have been going to a lot more WNBA games and not WNBA games that have been happening in Chicago.
But I have not been arrested, so...
Just because you don't get caught, Jake, doesn't mean it's wrong. Caitlin Clark, the weirdest thing to me is Caitlin Clark's been out for several weeks. It almost seems like the whole season with a groin injury. And there's kind of weird things that have been going on with regards to fan interference in the WNBA games themselves. So I think the problem that WNBA has, those things actually get rectified or eradicated once Caitlin Clark comes back from her groin injury.
So are you fading or trading?
I'm going to say I'm going to fade it because I think the fact that until Caitlin Clark comes back from her groin injury and all those things, I think that the problem takes care of itself. But she's not back yet, and there's no timetable for her to return.
I'm fading that the fan epidemic is going to get sorted out for a different reason, though. I'm a fan in this industry that all publicity is good publicity, and so whether the WNBA is in the media for the players arguing or for people throwing unidentified objects onto the court, I think it's good for the WNBA. You got eyes on it, people are talking about it, and I think it continues.
And you know what those objects are, Jake. And what game are you going to next in the WNBA?
I'll be at the next Valkyries game.
Okay, sounds good. Enjoy.
Thank you. Last one before we get to the random ticker roll and fade or trade a ticker is I already kind of covered it, but ESPN will ruin Red Zone and Inside the NBA. Are you fading or trading?
I mean, could I trade that all day long? I'll lever up that trade, and we'll see. We'll know though. We're gonna know after like the first year. I think it's gonna be a really like kind of sentimental kind of joining of them, and they're gonna make it like this hunky dory, like come as you go type of thing, and then all of a sudden it's gonna be a different product in years to come. The first year, I don't think you're gonna notice anything.
Yeah, I'm trading this as well. I already kind of gave my 2 cents on this, but I think when you buy a huge product like this, you keep it the same for a year and then you ruin it.
That's great, man.
So
that's a couple euros worth of money right there. I think that's good, and I think that's something you should all keep in mind as you go over the NFL, whether you do the NFL Sunday Ticket or the Red Zone. Just know that it may not be the same product come a year or two down the road, and just enjoy it while you got it.
For sure. Scott, let's wrap up with our first random ticker roll. So I'm gonna randomly roll I'm going to randomly select a stock here on our partner Y charts, and whatever comes up, we're going to fade or trade it. So give me a second.
What are you pushing right there? Are you pushing
All right, we've
the
got
symbol?
Schlumberger Limited, ticker SLB. Just give you some quick numbers here. Year to date, company is down pretty big, 14.5%. Earnings were pretty on par with estimates. You fading or trading SLB? And
I believe that's Schlumberger, believe it or not. Again, you mispronouncing a French.
It's the French
well, you need to learn more foreign languages
I did not
these days.
study in
We're
France.
frankly going to be speaking other people's foreign languages eventually anyway, because we're probably going to get taken over. Listen, the problem with Schlumberger, as they say, is that it's the oil and gas sector, and so you've got a lot of things that are going with regards to the oil and gas type of exportation, and things are happening in the situation of energy in the United States and around the world, with everybody buying Russian oil and gas and getting upset about it as far as the U.S. goes. You have better competitors, in my opinion, and better competitors in the United States that are viewed better, if I could say better one more time, by the U.S. consumer and, frankly, by the administration itself. So if you're looking at Schlumberger, Jake, you would be wanting to look at things like Chevron and maybe Exxon, which is Exxon and Chevron if you're an American, which means that, or Halliburton even.
You are an American.
I used to be. There's also things here with regards to Schlumberger that are going to be challenging from the standpoint of exports versus imports, tariffs as well. And so I think Schlumberger is one that you take a walk away from. But look at Chevron and Exxon maybe as potential suitors aside from that one.
I'm fading Schlumberger as well. I mean, 3/4 of their revenue are outside the U.S. I think at the end of the summer we're headed for oil prices to dip again, and so I'm fading Schlumberger in the short term.
Schlumberger, Désolé, because also they are one of the cheaper integrated oil companies out there. But again, they're cheap for a reason.
Yeah.
That's the other thing to think about when you look at them versus Chevron, Exxon, or other say counterparts, whether it's any industry. Everybody's like, oh my God, this company is so cheap versus the counterparts. Well, there's probably a reason that it is. It's because the company's not as good.
Awesome. That is episode 2 of the Positively Slow podcast, and we'll see you all in a couple weeks.